What's up guys, Steven Duxter. So in this video, I'm going to show you what have I been through since the first year and how do I really manage my risk at the very beginning of my trading career. And in this video, it's going to be a little bit more numbered and just make sure that pay attention to what I'm saying. I don't have like a board I can draw. So I can put the numbers right here and you can basically generally do your calculations. Let's get started. So a lot of people have a small account. Let's assume, because I did a server before, let's assume a starting account as 3,000. And for a $3,000 account, you don't have that much opportunities to really screw up. If you screw up, you're done. So a lot of people want to start with a small account and you're a college student or you don't have that much funds to really invest in the stock market, then this is your video to watch. Before getting to the video, make sure to hit the like button, make sure to leave a comment below if you have any questions. Let's get into it. So starting at $3,000 account, typically what I do for per trade will be $5,000. Typically what I do on risk-wise is 5% to 7% per trade. So if I invest or if I decided to short the stock or long the stock with $3,000 with my whole account, and I'm risking 5 to 7%. So the risk will be around $150 to $210. Now, a lot of people think, oh, you're just all in your account. But when you are trading that little small account, you have to kind of go 50% or 75% of your entire account. Now, before we get into that, you're going all in and you don't really know how to manage your risk, let me give you how to really manage all that risk plus with the pattern winning percentage. Now, back to the start, $150 to $210 will be your risk for total. And in this case, a lot of beginners, when they're trying to get into the stock market, they're focusing into multiple strategies. A lot of strategies, it's good if you already know what they're supposed to do. But as a beginner, you don't really have that much samples, you don't have data, you don't have statistics to support, you don't have any samples to backtest. And you're just going because people said it's going to be a good pattern and you're supposed to go long here, it's multi-day breakout. Now, the very good examples that I had is when people say buying a good breakout is supposed to have a really good winning percentage. But when I tracked 200 samples all together, the breakout, it always turns into fake out. The chances of turning into a fake out is about 60 to 70%. So basically you are buying a breakout within a 30% winning percentage. Now back into the samples. So once you figured out, okay, well, this is the maximum loss I want to lose, because before going to the market or going into any type of patterns, you have to think about what is your maximum dollar loss. It's because if you can't afford to lose this much, don't ever place trades that make you uncomfortable. So this is number one rule you need to stick with. Number two, general statistics. I know a lot of people have a question about how to really track statistics, what's the detail about it. I will do a video about how to really track general patterns 101 for the next video. So make sure to tune into the next video. Now for broad-wise, general statistic is you want to track the pattern winning percentage. Let's say I want to track the specific actions, how many times they happen, which is the frequency of the year. Because when I'm aiming into a strategy, I want to know what's my maximum risk reward, or what is my average reward, how many times do they happen per year. So in that case, I can simulate all types of gains, the minimum gain per year, the largest gain per year. So I will know how much money I can make by using a $3,000 account. Now, winning percentage is also very important, because from the last video, I did have a $25,000 account. It's to prevent that if the pattern did 10 times losses in a row, because there's a chance that if the stock has a 90% winning percentage, there's still a chance you can lose 20 times in a row. Always trying to focus on the best winning percentage when you just start on the first year of your trading is because you don't have that much chances to really screw up. So growing your first initial account, I would say it's the hardest to do compared to you have a bigger account. Now, once you find the pattern frequency, once you find the pattern reward, and you can use your general statistics to really know, okay, so let's say I made this trade, I risked about $150, I made about 450 bucks. Then I will have a $3,450 account. So in the next time, I can start to sizing a little bit bigger because I know this is a really high winning percentage pattern. So in that case, when your account grows into a $10,000, $20,000 account, and for me, I don't really go all in that much anymore. Because with the $3,000 account, you kind of have to do like 75% equities and 50% equity. But when you grow into something 10,000, 20,000, then your money starts to really show up. Let's say when you have a $10,000 account, you're using, like, say, 30% of your equity, you can make about $500 and $800 per day. That's considered to be really good. And when you grow into like $30,000 account and $50,000 account, the less equity you will need to use per trade. That means you can split your account into multiple different accounts to really protect yourself from all those losing streaks. Number 3, we're all humans, we're emotional, and we're gonna make mistakes, we're gonna make a lucky trade, we're gonna make bad trades. I would say you can't really prevent that, you can't not make any mistakes. At the very beginning, I would suggest you to study as much as possible to gain as much data as possible before you're really using real money into the trading world. So number 1, backtest your strategy. Number 2, manage your risk. Number 3, try to learn as much to really prevent you making mistakes. That'll be it for this video. Make sure to leave a comment below if you have any questions. I will do a video about General Statistics 101 for people that just got into statistics and wants to know where to track, how to track the day high, day low, how to really know where's the maximum reward and where's the maximum risk. Also, leave a comment below about an idea what should I do in the next video. And let's wrap it up. Thank you for watching. I will see you guys next video.